This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back. This is Joe Rabil, going to give you a stock market update for Friday morning, but I'm also going to do something special this week. I want to go through the market conditions. I'm going to go look at the indices. I'm going to cover interest rates. I am going to look at the sectors, and I'm going to go through commodities. So a lot to cover. There's pretty important time right now based on what the market's doing here after 5 weeks up. I think we need to evaluate whether the S&P is ready to turn to the downside here, or what at least to look for if that's going to take place. All right, let's go ahead and get into this. Just so you know, if you're interested in learning more about some of the techniques I'm going to talk about, I would start with the book. All right, I'm offering it at a discount right now. You can go to rabilstockresearch.com/book for more information. Okay, let's start out with the market conditions. And what I like to do is go from the bottom up. We'll start with the sentiment. The sentiment has jumped, and it was at 25%. So it had dropped. So up here, it was around 45 at the peak. All right, that's the difference between the bulls and the bears. That was an excessive level, very, very high. Okay, and then it dropped down. When it got down to here, it dropped down to around 25%. So that's a very quick, fast drop when you're in an uptrend. And as I said at this low, that I switched this to bullish at that point. All right. I've been using this investors intelligence for, I don't know, it goes back 30 years, something like that. And I've got a really good feel for when these levels are, the way it drops, how much it drops, how much the bulls are versus the bears. But in this situation, we've now rallied back up. We're making a marginal high, and now we're all the way back up to 42%. There's 42% more bulls than bears right now. So I have put that back to negative. It was like right on the edge of neutral last week, but it's continued to jump up. And we're also in overbought territory. Now, I know we're below the overbought line, but we're just flipping down from overbought. You can see we're up about 5 weeks in a row, turning down from there. So depending on how Friday goes, we could have a good day on Friday that moves this back up, and then this will probably be right in this overbought region. But I just thought after this many weeks in a row to the upside and the fact that we're in this area of overbought, that it's worth noting I have both of these on the negative side. Now, for the first time in a while, we've got these two overbought, these two on the negative side, right? Meaning too many bulls and overbought. And we also have weekly volatility that is currently above its moving average of the average 2 range. So we're actually in an area where there might be a little bit more volatility on the weekly, and depending on how things play out for Friday, if we have some strength for Friday and we keep above this breakout level, right, then that would be a pretty good sign. We're going to need to be on the smaller time frames. I'm going to go on that into in a second. But the other thing I wanted to mention that we did move to neutral on the momentum for the daily chart. Everything else on the trend and momentum are bullish. I'll go through that in a second. Let's just look at the volatility real quick. So you can see how much this has dropped. The daily average 2 range has dropped dramatically, and the moving average is down. Now we have this big monster red bar. That's really what's causing this to turn up here. All right, so that's the size of this bar. That's what average 2 range is. Now, it does include gaps. So you would take, this is the size of this bar, but we would include this portion. So we're including that whole line like that. You see what I mean? But you can see how the bars have been pretty small, and that's why this has been plummeting. So now we get this big red bar. We haven't actually re-entered the breakout yet. But I think it's worth watching here just based on what's taking place. Now, so I would prefer if this had been 2 kind of orderly, 3 orderly bars back to the moving average. Big red bar, obviously what happens on Friday will be incredibly important. We're going to need to see if we get another big red bar, then maybe we have a risk of breaking this moving average. And we could also have a risk of seeing the average 2 range start to jump a little bit too high. So if that happens, then we should expect volatility in here as opposed to any kind of a trend where we hold the moving average and turn back to the upside. All right, let's go through What I'd like to do, and what I mentioned in the opening here, I'm going to cover the sectors. I'm not going to go through them in depth, but I want to show you how you can take a quick snapshot, take a look at them, and I want to do the same thing with the commodities. And we'll go through those and see what's looking interesting. But first thing I want to do is look at the TNX, because I think these interest rates are what's causing a lot of the volatility. We've got this pattern where we essentially broke the uptrend line, okay? And we have now, so that's the one. And now we've moved up enough that we've got a line here and we've got a line here. So this is what I talk about in my book about how to frame out. I call it framing out the market. And now we're in this transitional phase. So we really want to be aware of this. This is what we call a transition, because we're not officially in an uptrend anymore because we broke the uptrend line, but we haven't turned to the downside and started a downtrend either. Okay, so we wait and we're watching, but while this is going on, we've got a lot of room here for this to roam in this transition. And while that's happening, it's causing volatility in the market, because every time interest rates go up, you know, that's a negative. Every time it goes down, it's supposed to be a positive. It's sort of a mix, and it actually affects the different sectors in different ways. All right, and we'll go through that in a second as well. But I thought this was pretty important just because we want to be aware, like today, market's down. We're getting a little bump in rates after pulling back to support. Now, I'm of the opinion that these are in sort of a range right now. I don't think you're going to break out to the upside or break down right now. I think we could stay kind of range bound in the near term. We don't have a lot of momentum. We have longer term momentum, but if you look at the weekly and the daily, we really don't have any momentum in either direction. All right, I want to look at go through the different time frames on the S&P, and no real change on the monthly. We're still in pretty good shape here after pausing for a month, but we're stretched away from the 18-month line. We've got a little bit of air underneath, so you know the potential for this to go sideways a little bit longer, I still think would be a healthy thing. One of the things I wanted to show, though, is that we got this green bar, green bar, green bar, green bar, try to break out after several weeks up. What do I usually say? If we're overbought into a breakout, then expect, you know, probably some backing and filling or something like that. But look at what this has done. We've got higher low, higher low, higher low, higher low, and we're currently at a higher low. And MACD has not been able to get back above the signal line. So what is this? This is what we call a divergent pinch play. All right, because we're pinching into the signal line, which is overbought from zero. All right, and we've gotten several higher lows here. So if we take out the low of this bar next week, we'd have to do it next week. It won't tomorrow unless we come down through the low of this bar on Friday. Then we don't really have any signal. So this is likely going to be another higher low, and then we're going to have to see next week if there's downside follow through. What I would say if that happens is that sort of confirms that we have created a failed new high with divergence, with a pinch play, right? Doesn't mean we're going to go crashing down through this. Doesn't mean we're going to fall apart. You know, it doesn't mean this is really going to turn into, an ugly situation, because the momentum is still really good based on the ADX. So this is helping us helping us with the short-term pattern. This is telling us what the quality of the trend and momentum right now. All right. So I could see this sort of channeling, pulling back, consolidating, maybe coming back and testing support again. But is it really ready to fall apart? I don't think so. That's not where I am with this right now. Now, what I mentioned last week is that we saw pretty good action in the MACD, pretty good action in the green DI. It did break out above red. Here's the problem. Now we have this big red bar. Now I turned it to neutral for this reason. We basically only got up to 20. We just had a full length swing to the upside. See the size of this swing? This is a long uninterrupted swing. Okay. And we couldn't get the ADX really above 25. I mean, it was up maybe at 26, but not the type of signal that I would consider to be, all that strong after a pretty substantial move to the upside. We didn't even get back above this red peak, which really wasn't very high. So That's the reason why I moved it to neutral. But we have to see how we handle this breakout area here. If we have a lot of follow through, if we get another big red bar here, then the volatility is going to go up. The volatility on the weekly is going to stay high. And we're probably going to break this 18. And if that happens, then we should expect more consolidation, more corrective action right now, which actually is not a negative. I mean, I know it would be a negative in the near term, but it would be, I think it would be positive to fill this in a little bit more. Because right now, I'm less inclined to have an interest in doing stocks that are longer term trades right now because of how stretched away we are from the weekly. If you wanted to take smaller term trades, shorter term trades, like a weekly with the daily timing or a daily with the hourly timing, I don't have a problem with that based on the volatility right now. But we've got to see how hard this wants to come in. We have to see how this handles this 18-day line. All right, let's quickly go through and look at some of these sectors. So one of the things I wanted to point out when you look at this, so right now this is below the moving average. So what I've got is the 18 and the 40 moving average on, so this is XLB, okay? And then I've got the relative strength line with a 30 MA here. All right. Now, the slope of the 30 is really important on these relative strength lines. You want to watch the slope on all of these. All right. But right now, you can see what this is trying to do. It's trying to turn things around. And I was hoping it was going to get above that, but it hasn't really done that. But when we go into the commodities, you'll see what's going on with some of the subsets of XLB. And I think that's pretty important. Now, XLC is actually starting to turn down after a divergent peak. So we made a new high in price, but the RS did not confirm that. And this is starting to break through the signal line. So we got to watch this really close. I'd be very reluctant to be too aggressive in the XLC right now. Now, XLE was showing a sign that it was trying to turn back to the upside, but it hasn't convincingly been able to get this moving average to turn up. We really need to see energy have a good week next week. All right. We've had a kind of a rough week here, but we're back to key support. If energy has another bad week next week, then I think this whole move is sort of in question now. Doesn't mean the bigger picture is in question, but the potential trading play that was trying to develop could be very questionable. All right. Look at the XLF. XLF has been in pretty good shape, but we are below the moving average. Now, notice the only two sectors that are above the moving average right now of the relative strength is in the technology and utilities. All right. Now, in a lot of ways, the big cap tech stocks are defensive. Okay. They're being used as sort of defensive areas. So it's not surprising to see these rallying at this point. But we got to watch this because if you notice, they had been outperforming and the moving average is starting to flatten. So if we get a down leg from here and we make a new low, you have to look at this as sort of like a failure on the relative side. This is completely different. This is turning up from being down for a long time. And this is really intriguing. And if this can pull back and this can pull back and turn back like that, we have a lot more convincing evidence. But if you start to go through and look at some of these, you know, the XLI or industrials had been pretty strong, but it's kind of dropping back down. This needs to turn back up. We're at a pretty critical level on several of these. XLRE was never able to turn up. XLY has been very, very weak. XLV has never been able to really turn the corner relative. And XLP is trying to turn the corner, but hasn't been able to pull it off. But, you know, you want to look at these charts on a semi-regular basis. Now, I go through all the stocks inside these, right? I'm looking at thousands and thousands of charts each week. So I'm trying to identify what subsectors inside of here, sub-industry groups are looking attractive. But you do want to know what's going on a broader basis, just kind of looking at that. And right now, the areas that are intriguing me the most are there's some areas inside of XLB that looks attractive. Energy has some stocks that look really interesting. But as I'm saying here, we really need to see this start to see some signs of improvement really soon. Now, technology got overbought. On my Monday report, I do a special overbought, oversold oscillator based on a component index that I create. Looking at all the individual symbols, and there are a pretty significant number of breakouts taking place. So I am somewhat intrigued by that. I definitely like what's going on in the utilities, although I do think they need a pullback. Financials have had a pretty good run in here. I think there's some interesting stocks in that area. And actually, believe it or not, I do think there's some interesting patterns developing in the healthcare area. All right, let's take a quick peek at the commodities, because this is kind of interesting. If you notice, all the relative strength lines in the sectors weren't all that great, but look at the relative performance of gold, of silver, of copper. This is relative to the S&P, but it's giving us the same feedback that what we're talking about here. Now, oil, right, is looking a lot like what's going on with the energy. Like, it needs to get going here. It's right at a key support. But notice how strong these are. The fact that these are so strong, they could take a little breather after a big run, which it looks like they might be starting to do. Look at the red bars forming on the weekly bar. So don't necessarily want to chase these. We could probably hopefully get a little bit closer to their 18-week lines, and I think that could be pretty interesting. Notice wheat starting to perk up here. Notice soybeans not as strong, but is trying to turn to the upside. We had a really big move in coffee that pulled back to support, and cocoa, same thing, needs to turn here pretty soon. So that just gives us a feel for what's going on. You can see where the money is flowing right now is in some of these metals. We're starting to see it in some of the ag area, and oil is at a really critical point, and that's going to have an effect on the energy sector. So that's the update for the week. Let me know if you have any questions or comments. Thanks.